those reports where, let's say the economy were tepid, and you got this report, you would say, you know what? Those rate cuts have just been incredible. They're really starting to put up a lot of people to work. Those rate hikes are incredible. They're cooling the economy. This is an economy that is so strong that it has not yet been hurt, or if it's been hurt, it's been hidden.
And yet, I mean, not a day goes by that we are not featuring some level of job cuts at a company that many people may know. Now, these are not hundreds of thousands, but you add them up and they start adding up to something, don't they?
Just very recent. I think that they don't. This week, for instance, we've had so many more than we had the week before, but they're not sizable. They're not what I expect to see by now, which is such and such a company is closing because it doesn't have any money. We haven't hit that point. Many of the companies that have come public in the last 18 months, they have to be running low on cash.
They do. I want to talk about that, but you've got a lot of things circled there. I didn't mean to stop you from sort of sharing some of the insights from the report.
Retail trade down 30,000, job losses in general merchandise. See, the problem with that is that's exactly where I was thinking about it. I said, well, geez, the furniture, home furnishings, that's got to be lower. Well, it was. Electronics and appliances, that could be lower. So it was. Warehousing, Amazon, yes. But the others, I mean, manufacturing's good. Construction's really good. Government, of course, is adding like mad, and government's playing a pretty big role in putting people to work. This is certainly not the Reagan administration. Yep. And I just look at this and I say, thank you, Chairman Powell, for keeping rates so low and making it so that everybody's got jobs.
What about wages? To go back to that, I mentioned average hourly earnings up 0.6%.
Still not keeping track of
month over month. And I'm reading from Peter Bookvar, always puts out a nice little quick note. Double the estimate, and October was revised up by 0.1 to a gain of 0.5. It was up 5.1% year over year. That's been the trend for most of the year. It's double the pace seen in the 20 years that were leading into COVID. And that continues, it would seem, to concern the market. And by the way, it's what you've come back to many times in talking about what Powell wants to ultimately see lower.
Yeah,
wage growth, correct?
Yeah.
Not happening.
No, not at all. Now, and I now realize, look, I speak to a huge number of companies, but they almost feel anecdotal at this point, or too retail-oriented, or too. But look, I follow tech. I follow every industry. All right.
Yes, our viewers are well aware.
And I don't know anybody who's hired at all the companies I talk to, but they're not firing, except for say, Mark Zuckerberg, firing a lot of people. But the big, Amazon's laying off some, but I think there's some much bigger layoffs.
Well, we've talked about the fact that, we're looking at some of the layoffs. Listen, those are all well-known names.
But look at that. That's no kidding.
Today about Sirius Satellite Radio laying off some people, but the main posture has been, all right, we're going to slow, if not stop, hiring, as opposed to really begin significant.
No, that's really important because, so there's a downgrade today of Salesforce. And the subtle notion is that Mark Benioff has not bitten the bullet. He's got too many people. Now, a lot of those companies seem like they have too many people. DoorDash, which was downgraded today, has had too many people. But why are others so reluctant to admit? And I think that is because they're still doing good.
Right.
We had a lot of companies in the enterprise software report this week, and those companies are badly in need of layoffs. But they just don't want to do it.
Were we right to unwind the rally from Wednesday that resulted, obviously, from what seemed to be indications from Powell that rate hikes might be a bit less than had been anticipated?
You got to unwind that. I mean, we are a seasonally strong period. But if you think that the 2-year is going to give you, let's say, 5%, geez, that's a good piece of paper. It's not there. It's not important.
No, it's not there. It's not there.
But David, I think that the rally based on Powell seems at this point ill-advised. That a lot of people went to it. We are a little overbought. David, these are astounding numbers, for heaven's sake. I mean, everyone puts out these recession forecasts.
Yeah.
And
We're not.
This is a growth number. I mean, it's
right.
like people have to recognize that at any given time that I know of in my 40 years of investing, you got this. This is a growth forecast. And if anything, you would think that the GDP is going to go higher.
Yes, all those things.